The markets are struggling for direction as tariff uncertainty continues to drive investors crazy. We'll be discussing that, the latest happening in Japan, and much more today on Money Never Sleeps. Once again, having internet issues. Thanks for joining us, folks. As we get going, do us a favor, hit that like button, subscribe to the channel. Remember, nothing Kevin or I say is financial advice, so please do your own research before making any financial decisions. Kev, no show on Wednesday. We're back to wrap up the week. Not anything too crazy happened in those few days. We had some tech earnings, some beat, some missed. We had back and forth this rhetoric going on. Trump saying that they're in discussions with China. China saying that there have been no talks whatsoever. So no one really knows what the hell to do right now. Meanwhile, the dollar is struggling. Gold continues to climb. Crypto took a little bit of a leg up. So a lot to digest there. And the next week, we got a ton of economic data coming in. So should be a big week to close out the month. But how are you feeling today, buddy? Where's your focus in the markets?
Yeah, I'm doing good. This just seems right now in this market that it's a very stupid time in the market. I hate to say that, but it just is because I'm looking at things that don't make necessarily the most amount of sense. And then you're hearing all this rhetoric from the administration, other nations regarding tariffs, trade. And it's just like, come on. I feel like, what's his name? Steve Carell in the book Big Short, when he's like, okay, all right. Every 2 seconds that Ryan Gosling's trying to explain what CDO is. Like, that's literally where I feel. Like, come on, can we just get to the fucking point at this point? These markets are just stupid. I continue to look at stochastic RSIs, overbought. Doesn't mean that we aren't soon going to go up. I believe we are going to see a rally to the upside. But this is like a weird place to rally from in the middle, because then you're assuming that there's going to be a lot more capital QE that's coming in to push the markets higher than where they've been in the past all-time highs, which I just don't see. So are we squeezing a little bit here because a lot of people are expecting downside and we're going to start shorting? That's a possibility that we're seeing right now in this market. There's a lot of Tesla shorts that opened up. Tesla's now going up. A lot of people were shorting Bitcoin for the past few days. Bitcoin's only going up. A lot of people were shorting GameStop, but GameStop's kind of going up. So we're in this like little squeeze in the market right now, and it's very hard to navigate. And that's just kind of the why there hasn't been too much in the news, and why we didn't really need to do a show Wednesday, and even today. This is it's a very strange place in the market. I hope next week brings a lot of clarity, because then we can kind of do actionable things with what the market is kind of setting itself up for.
Yeah, absolutely. It's been eerily calm I think everyone's just kind of waiting and sitting on pins and needles, not sure what to do next. I mean, Trump said today that, expect more clarity around tariffs in the next 3 to 4 weeks. So the markets are staying relatively muted there.
Yeah.
And that could all change in the blink of an eye, right? So I think for at least next week, we may actually see the markets move on data, not just on whatever comes out of Trump's Twitter account or the latest White House, press secretary statement. So a lot coming out. Yeah, let's real quick. I just want to go over what we're looking at next week. We have some job openings on Tuesday, as well as some other trade information, which is going to be interesting to see. Wednesday, we get private sector employment, we get GDP, we get PCE. So Wednesday is a huge one. We'll definitely do a show Wednesday. Thursday, some manufacturing data, and then Friday we get the jobs report for the month of April. So a ton Wednesday through Friday. That's going to kind of point us in the direction of where the markets could move in the next couple of weeks. Obviously, with the caveat of it could all change in the blink of an eye if anything happens with the tariffs. right?
Yeah.
Like it seems there's so much uncertainty there. I was reading an article earlier. The dollar is having its worst first 100 days of a presidency since Nixon in the early 70s. There is a lot of hedge funds shorting the dollar, so the expectation is going to continue to struggle against the euro, against the yen. So, what do we see there, and how is that going to impact the markets? I think is a really interesting thing to try to piece together.
I absolutely agree. Yeah, this is very eerily similar to that stagflationary period that we got right after Nixon, is it not? Like in the 70s? It's a very similar setup. So that's going to be, and again, people shorting the dollar, a little dangerous. Hopefully they don't have like massive positions, because if something does fail, and it's very possible something does fail and there's a dollar shortage, you're probably going to see the dollar rally fairly hard. I don't know if that's 6 months from now, 3 months from now, next week, right? I'm leaning more towards the second half of the year, but yeah, this is way different than I had anticipated. This is more like what you had said with that stagflationary period, and that jobs data could honestly cause some major volatility come in next Friday. So it's going to be a fun week.
Well, and I think the dollar could also go on a run if what Trump is doing works. Like I personally, like I'm not a big believer, but I could absolutely be wrong. And if he makes good deals, it seems like they're making progress with India. If something does happen and they're able to make progress on a mutually beneficial deal with China, like that could also be a big positive for the strength of the dollar, because right now the fear is people aren't going to be using the dollar as much. It's going to lose that global reserve currency title. But if trade deals are beneficial for the U.S., that could change very quickly. So, I think the funds are making a bet against Trump's strategy. I can't say that I disagree with them, but hey, listen, things could change really, really quickly. What else? We had some data come in from Tesla this week. Not solid earnings. We saw Intel, it beat its earnings expectations. We've seen a lot of other, tech seems to be doing pretty well when it comes to a lot of the tariff concerns, but a lot of other companies that rely on more international trade have definitely been struggling with their forward guidance.
Yeah, absolutely right. That's the thing too. I think a lot of, like I said earlier in the show, a lot of people are positioning that some of these companies are going to be hurting, and you're seeing the absolute opposite in the markets themselves, right? Let's just pull up Tesla for the time being, just because that's one of the heaviest shorted stocks out there. There's tons of puts are bought on it. Same thing with Nvidia. We can look at Nvidia in a second too. But these guys are doing pretty hot today. Look at that. Today is also an options day. It's not a big options day. A lot of things are just kind of expiring at 3 o'clock. That's why you're seeing a bit of a sell-off in some things and rallies and other things into the close today. But Tesla going up to above the 50 and at the 200 moving average. You already got the death cross. I'm not necessarily sold that this is a good move. This looks like a continuation pattern to me. And again, I say that just because looking at here, you're just kind of range bound, and if you break into a range like that, you're probably going to break out of it to the downside. Now, it doesn't mean it's going to go all the way down here to $65, $64 if this does break, but I do think it could break down to that low again around 214, maybe even a little bit lower to like 183, 181. That being said, we look at the stochastic RSIs, extremely overbought, right? Now let's go check over in NVIDIA. It's a very similar setup here. You're getting close to the 15 to 200s. You're testing it, but you're pushing the stochastic RSI. You're getting very close to that. So, yeah, I think a lot of people are squeezing some of these stocks, some of these options into these, this small OPEX that we have today in the 25th of April, which again, not necessarily a big one. Big one was last week, and then we have another big one in May. But looking at this here, it doesn't seem like this could be the reversal that leads us into the summer rally, right? Like you said, it's eerily calm out there. I expect something to break. Maybe I'm wrong. Maybe I'm absolutely wrong, and this thing just goes straight up until in the summer, and the stochastic RSIs are just showing bullish momentum as opposed to kind of low volume and price pushing up, that type of bearish divergence there. But I think we're seeing people, at least some insiders, are probably going to be taking profits somewhere around the 50 to 200 moving averages. As for Tesla, that's for NVIDIA. I think there's just a lot of convergence there that's suggesting that we could see some good resistance at these levels. So with the tariffs and stuff like that, maybe something comes out next week that's kind of bearish for them. But for the time being, it seems like maybe people are right and wrong by buying these puts. Hopefully their duration, which they expire, just isn't today, because they would have gotten killed on that move.
All right. What else do you think is worth looking at in the charts? Tech is trading pretty similarly today. Bonds are being bought up, so we're seeing yields coming down there. I think, kind of weird to see bond yields going down while stocks are up on the day. But what else? Let's look at the DXY. Go ahead.
We got a couple things. Just nothing too crazy. Shows that something is coming probably fairly soon. DXY, I'm pulling this up. You got a pretty good rally. Daily stochastic RSI is getting close to overbought. You haven't really moved much from that 97 level. You're at 99. Okay, sure, you bounced from 97 to 99. It's pretty good, but you're going to start seeing this get pretty overbought. And the other currencies that we kind of want to be careful with right now, obviously the yen. Yen is looking extremely overbought, which technically means that it's getting weaker. We need to get stronger if we want more pain in the markets, which kind of align with something happening fairly soon. But volumes are dropping on it. Stochastic RSI is overbought. Tells me we're probably going to see that reversal that makes it stronger against the dollar. The other one that you kind of want to keep an eye on that we don't talk about too much, let's see if I got it right here, is the Swiss franc. Why the Swiss franc is important, and it's kind of doing the same thing as the yen itself. It's rallying here, so it's getting weaker against the dollar. And if it breaks, then you're probably going to see it get stronger, which means that you're going to probably see a lot of these contracts, a lot of these stocks, a lot of these carry trades that we witness all the time kind of unwind. And the reason why I bring up Japan and Switzerland, because these are probably the two most fragile economies out there right now. People don't necessarily say that, but they are. Japan is 100% fragile. Everyone keeps saying China, China, China. They can survive. We've seen it before. China last year had, look, Country Garden, Evergrande. We could throw everything in China, and somehow these guys keep surviving. They keep moving, and the yuan, again, whether you believe that is the right pairing for the yuan, currency is going to stay at like that 717 to 730 so range. Now, for the Swiss franc and the yen, these are dangerous because a lot of derivatives between these two countries managed in these currencies. So if they start getting stronger and the equities in which that they're thrown into, or the options they're thrown into, start getting devalued, you're looking at a world of pain where they're going to have to make things right. Now, the reason why Switzerland is more important than Japan, I think, is because a lot of Switzerland's wealth is tied up into one institution right now, and that is UBS. And we've talked about how UBS is in a very critical place with GameStop, right? We said that if GameStop decided to start squeezing, they're pretty much on or off paper, whether we decide or not to acknowledge it. The toxic debt from Credit Suisse, which they acquired, is now theirs. So they're going to be liable for, making sure that they are able to pretty much post some of those losses. So we're going to start seeing a lot of people maybe trying to buy back some of those shares, whether it's dark pools, which means that you're not going to see that necessarily in the reflected price of the trading hours like we are right now, or if it's straight into trading hours, there's a good chance that if these two currencies decide, the yen and the Swiss franc decide to get stronger and the US dollar starts to collapse a little bit and bring down equities with it, you're in a very, very bad place for the global market. And this could be very similar to what we saw with Iceland and Greece back in 2008. It could be Japan and Switzerland being the first ones to go down. And then a few months later, they say, oh, it's contained. And then we have a big problem in the global markets for China, Japan, the United States, and a lot of these other countries. Japan, obviously, more so. Later on, they would probably have a lot more pain too. But to start off, they could be one of the ones to ignite what I expect to lead us into some type of QE that gives us this summer rally. Just right now, like you said, everything's very eerily scary. Like nothing's happening, eerily calm. But these are very big warning signs that we need to keep an eye on. So Swiss franc.
Yeah, when it is feeling this calm, like we need to look where other people aren't to try to find clues on where the market might be going. And
yep.
it's very much a like everyone's looking at tariffs over here. Is there something over here that we're missing out on that is going to kind of point us in the direction of where we could be going?
Exactly. And we could say the same thing about, we're looking at the treasury yields, right? Look at the yield curve. At one point last week, it was at 0.67. That's insane. Considering how inverted we were for such a period of time, now we're just rallying like crazy on this yield curve. This is the red line is flat 0%. Clearly north of that. Looking at some of the other stuff, yes, they're buying treasuries, right? But you're still at this level where this thing could bounce and could still go a lot higher, which I genuinely think is probably going to happen. Especially if you get that QE, something happens, like maybe treasuries go down, the 10-year goes down to like 4%. But if we start seeing some type of QE or some type of, I don't know, maybe Japan and the US get together and they start buying more US debt, there's a good chance you see that money float back into the equity markets and into the economy. And that could lift these markets up a little bit. That would also devalue a lot of these treasury bills going into the end of the year. So we look at that. We look at gold as well. And then we could talk about some of the important stuff like Fartcoin and Bitcoin, because this episode was called Hot Air Rises. And there's an important reason why. We'll take a look at that. But gold has a very interesting top for the time being, right? It went all the way to about 3,500. Now it's at 3,291. Could it push up a little bit higher? Absolutely. The thing we need to be careful, though, is if something happens, you might get one squeeze up a little bit higher. And if they say, we're going to pretty much take our foot off the gas because the economy is slowing too much, too quick, this thing's done for. Gold is going to have a massive reckoning that we will probably see over the next 2 years until maybe something else happens with the 7-year bills or a 7-year debt. But there's a good chance that we're looking at the top of gold, not being necessarily today, but fairly soon. Again, I expect one more thing to kind of bring us down a little bit lower. Could be wrong, but that could be the case where we start to see all these gold bugs, Peter Schiffs and everyone in the world, maybe they're taking profits fairly soon. You don't want to see rate cuts for gold. That's the only thing I will say moving forward. Outside of that, let's talk about some fun stuff. Fartcoin. So I know you're a big Fartcoin holder. I am a believer. I'm hoping that I can get in a little bit later. Again, I keep pushing it. I'm almost trying to speak it into existence that we get to that resistance line, because I am a huge Fartcoin believer and meme believer, probably from May till August or September. But looking at Fartcoin here, what are your thoughts on Fartcoin moving forward? Do you think we're going to get a bit of a pullback? Do you think it's possible that we go to all-time highs? I still agree with you that we could see something very similar to Shiba Inu with Fartcoin, but I'll let you take the floor.
I think I'm holding my Fartcoin. All of my SOL that I had previously is now in the form of Fartcoin. So that is my exposure there. And without having, their Fartcoin's listed on Kraken, but it's still not on Binance. It's still not on Coinbase. I do think that there is a lot of room to the upside, even without the centralized exchange listing. But getting listed on those centralized exchanges, well, obviously have a solid impact there as well. So, do we go under $1? It's certainly possible. I'm feeling comfortable in my Fartcoin holdings. I've a good enough amount to where I can take some profit on the way up. Once we, I have no intention of taking profit before we hit a new all-time high. I think that the new all-time high is coming. Maybe not this month, maybe in May, maybe in June. I don't know, but I think we've seen one thing that gives me a lot of faith is we've seen a lot of big sales in the last few days. Liquidity is high. The price has been rebounding when those sales have happened. And so I think that there's a lot of strong indicators that Fartcoin has plenty of room to the upside. I cannot believe that I got a degree in financial planning and I'm on here on YouTube talking about fucking Fartcoin, but this is just the state of where we're at right now.
Hey man, they did it to us. We're just fair value buyers in the market, and Fartcoin is one that we believe in. When I'm looking here is very interesting with Fartcoin, right? We got 5 waves up. So I think that this little move that we have to the upside from this cup and handle is very close to being done with, or it might actually be done with. It might be at 120. Now, what we expect is some type of corrective move, which would be maybe like an ABC, right? Maybe that gets us down to like 65 cents, where that's our level where we could bounce back from. Sorry, I just heard some knocking outside. But from there, I think that if we hold support, and it says May 15th, kind of where this potentially could be, if that's the case, and we get some type of QE, which would be maybe somewhere in between the two Fed meetings, maybe we get one cut or something. Again, a decorative cut. And that doesn't necessarily mean much, but it juices the markets enough. You could have another 5 waves up. It's very possible. You could have like this massive ABC corrective pattern, which is first 5 waves, then 3 waves, and 5 waves, taking us well over the all-time high. And that kind of coincides with what we're seeing right now with Bitcoin dominance and Bitcoin in general, right? Bitcoin dominance, we called it. We said that it was going north of the cycle high, which would have been in February. We're at 64.54. You're not necessarily seeing the rest of the markets push up with it. You're not. Maybe Sol a little bit. Again, nothing that's telling us that we're going towards all-time highs. Still, what, $130 or so away from the all-time high there. Bitcoin itself, let's see if I can pull that up here. Bitcoin itself isn't too far off if it really wants to push, 15,000 from here. I think that's very possible. I think that's more likely to happen than, say, Solana or XRP or any of these hitting. Actually, not XRP. Terrible example. Solana or Ethereum hitting all-time highs, given where they currently are sitting. But again, dominance is extremely high, and there's a lot of people shorting this thing, and I don't like that. The funding rates have been negative for like 5 days straight, which means everyone kind of anticipates a move down, but you're fueling the fire for there not to be. So everyone just grabbing the liquidity that they possibly can. So it's very possible we could see $100,000 Bitcoin again in the very short future, near future. That being said, I'm not necessarily a firm believer that this thing is going. I've seen some crazy believers who think it's going to like 165. Unless Michael Saylor, taps, I don't know, the richest men in the world and says, buy 1 Bitcoin each. Bitcoin's the future. Buy 1 each. And says something like that along those lines, and he gets like unlimited money to throw in there, then you're I just don't see the money that's coming in. Again, Tether and USDC been very quiet. Very few times will you see them print. Have not been seeing them print like you saw in the past few years. So that's why it's, kind of a slow move for Bitcoin. Obviously, really good day this week, Monday and Tuesday, a few days this week, I should say. But, you got to push up a lot higher. You got to push to that, all-time high. Otherwise, what we're seeing here is a death cross rally, and then we're probably going to get rejected from this at some point, come back down, and then you get your death cross on the 15 to 200. And again, that's accounting for something bad happening in the next few weeks that allows us to get more fuel to push up a lot harder and a lot faster in, all of crypto, alts, Bitcoin, and other things leading into the end of the year, into like September, October, right? So that's my kind of base case for what we're seeing right now. A lot of liquidity that we're just squeezing the shit out of across the board. Everything else looks pretty bad. Even looking at ETH, look at ETH on the stochastic RSI. We haven't looked at the Bollinger Bands. Let's take a look at that real quick just to see if anything is happening there. Let's go to the weekly, actually. Man, there's actually a lot of stuff going on here. Let me see if I can eliminate some stuff.
There's just too much happening on that screen, man.
Yeah, see, so we're seeing the Bollinger Bands kind of tightening on ETH. I want to see us go down to, maybe not. That would be kind of bad. I'm looking at this right here. If ETH were to drop from where it currently is to the bottom Bollinger Band on the weekly, we're looking at about $1,100 ETH. Maybe that's possible. We really don't know. But you can see that things are kind of tightening up here on the weekly. You can see that they're coiling up. It looks like the weekly wants to run for Bitcoin, which could put us, at that 107 level. But if we want to go down a little bit, 77 is still very possible on those. Let's see where Fartcoin is. Fartcoin doesn't have enough data, so it can't take us to the promised land yet.
Yeah.
But yeah, I think that's good enough for the crypto outlook. I did want to talk about GameStop and FFAI real quick because we saw some big moves there yesterday. GameStop, you're looking at a move that was that's not necessarily weekly. Let's go to the daily. This was yesterday. We saw a ton of people buying, and a lot of orders hit the lit market, meaning that they're during trading hours, real price action that was happening. You can see that it went right to the resistance line and it started to come back down. You're still staying you're being kind of an asshole to a lot of hedge funds staying at this level, right? we're getting close to a point where it could be breaking. Either we're following this massive parabolic trend line. Let me see if I can make this more lower or raise the opacity. There you go. We're either following that huge curve, or we're in this parallel or this triangle, this wedge pattern that eventually will break to the upside or to the downside, and that comes somewhere in July. I don't like that one because I don't want to wait that long. Again, speaking things into existence, I'd rather it be this parabolic trend line here, and we're getting pretty close in May, and we'll probably see some type of move to the upside. And again, I truly believe GameStop is one that's going to take off when everything else is eating shit. So if we do get some kind of pain in the system, I expect GameStop to maybe pull back with the market for a short period of time. And then I think when there's a lot less liquidity out there for these margin calls to be paid forward, then they're going to have to start buying back or, closing some of those positions, which leads to the squeeze in itself. Now, we also had the theory that UBS was buying FFAI. This was a company, again, I always make fun of them. They don't make cars, but they're an electric car company, but they don't ship them. I've never seen an FFAI vehicle ever in my life. Didn't hear about this until, someone brought it up on Twitter. And I'm looking at this, and we had a massive pump yesterday. We were up 27% yesterday. That's a really good move to the upside. Even today in pre-market, we went as high as $1.24. We've had a pretty big pullback today. We're down 9.65%. It's at 103 or so. This is a very similar thing. There's a lot of buying orders that came from GameStop. I think a lot of people hedged. We also had some really good value down here in the 80s, the 90s. I didn't buy any down there because I was like, oh no, if I'm wrong, this thing's going lower. Wasn't wrong. They were buying down there, and you're starting to see a lot of people position for something that might be coming. Again, you're seeing positioning across the board in different things. You're seeing Jamie Dimon sell. You're seeing some of these hedge funds buy GameStop. You're seeing some of them buy FFAI to protect themselves from any potential losses. Someone knows something. People are aware that there is something coming down the pipe. The question is, what is it? When's it going to happen? And are we on the right side of some of these trades? And again, time perspective, time horizon, these things are going to be really important when we look to it. So, one thing that's happening a lot is Trump will talk up the market. And then the next day, someone else will come out and the market will dump because it's like, well, we're not sure. So it's kind of easy, I feel, to trade in this market because once Trump comes out beating his chest, it's like, okay, I guess you can long for today. And then tomorrow, it's just like, sell everything at the end of the close today. Again, not financial advice, but I've done that a little bit. I've made some money, and it's been pretty. It's been holding pretty easily. It's not the Joe Biden markets where you just buy and you go away, and next thing you look at, you're up 2,000% on Nvidia. It's not those markets anymore.
Yeah, I miss those. All right, that's going to wrap it up for today. If you have not yet, please do us a favor, hit that like button, subscribe to the channel, throw on notifications, drop a comment, share it on social, whatever the hell you want to do. We'll be back next week. Ton going on. A lot of data, earnings, shit ton of stuff to go over. So I'm looking forward to it. Hope everyone has a great weekend. Rest up because the grind doesn't stop. Money never sleeps. Appreciate you for joining us today, everybody. We'll see you next time.
Take care, everyone.